London AIM and Toronto venture-listed Arrow Exploration has just published a mid-year update which showed the test results from the first half drill campaign at its project in Colombia. Those drill results also added more targets. So we're talking here about a company which is looking to pump oil possibly this time next year. Let's get an update now from Arrow's Chief Executive, Marshall Abbott, who joins us now from Calgary. Marshall, it's great to catch up with you. I love talking to chief executives of these small companies because there's so much going on. And you're doing so much at the moment, and you produced this half-year update. Before we get into the details of that, just explain more about what it is you're trying to achieve at Arrow Exploration, because, as I said, it's a company with a good eye down the track as to where it wants to be.
Well, thank you for the time first, Jeremy. Thank you for this opportunity. So Arrow Exploration is a Canadian-based oil and gas company with focus primarily in Colombia. We have existing infrastructure in Colombia and a talented staff on the ground down there that is ensuring we can execute on our forward plans. So today we're producing just under 1,500 barrels a day, and that is curtailed on purpose, which I'll get into in a minute. And we're also focused on a drilling campaign towards the end of the year. We're going to have 4 wells down, shooting a large 3D seismic program over our block in Colombia that will take us to in excess of 3,000 barrels a day by the end of the first quarter. Colombia is a very interesting place to explore and exploit. It's in the top decile of fiscal regimes in the world. We pay an 11% royalty. Wells typically come on at between 500 and 1,500 barrels a day and pay out very quickly. So from that perspective, Colombia is very immature with respect to drill density, as if I was going to compare it to Canada. So we like the jurisdiction, we like the opportunity, and the resource is fabulous, as well as the cash flow that it generates.
Yeah, let's take a look in some more detail then about this mid-year update, which I said at the top has produced the details of this first half drill campaign, which I also understand brings about new targets that obviously you're going to be talking about. But just update us on what this report gave us. I ask this specifically because I noticed that yesterday when the report came out, there was a small dip in the share price. What were investors trying to read into these numbers?
Well, we've had success with the drill bit on our initial drilling campaign. We've got 3 wells on what we call the Tapir block, which is 100 square miles in the heart of the most prolific basin in Colombia, the Llanos Basin. So our production had been as high as 2,100 barrels a day, and there was one particular well where we discovered a brand new hydrocarbon-bearing zone that we have opted to just watch its behavior. And so it's gone from about 1,000 barrels a day to 400. We have 2 other zones within that wellbore that we can perforate that are known to us that will likely add another 1,000 barrels a day. So we anticipate that by the first week in October, we'll have a service rig on that well, recompleting the zones uphole. But the new zone was a surprise to us, a very pleasant surprise. And we've watched its behavior. It was a flowing oil well. Now we've just put it on pump, and we expect that production to get back up to where it was previously.
So in terms of what happened yesterday on the share price, were you fazed at all by the negative reaction? I mean, it is only just a small retracement on what has been a fairly steady price rise. Anything you want to say particularly about the market reaction to the numbers?
Well, I think there were expectations that we would produce 2,000 barrels a day in the report, but as I mentioned, we had purposely curtailed the production out of this one well. We call it the RCS1 well. And that well, as I mentioned, was a surprise in a particular zone called the Carbonero 7B. We've been producing out of the Carbonero 7A and Stringer historically, and the wells pay out very quickly. So my message would be that we have the ability to turn these wells back on to full production. That being said, we are stewards of the reservoir, and you don't want to ruin the reservoir by pulling on it too hard. So we prefer to be conservative and successful.
Of course, yeah. Let me bring up a share price chart just so we can see the context of what we're talking about here. This goes back to the point at which you IPO'd back in October last year. This is the London listed share price, but of course, as I said, it's also listed on the venture exchange in Toronto, my understanding is they fairly well track each other. This represents, I should say, as well, a market capitalization of just shy of 60 million sterling. My understanding is you've got about $8 million US in cash on the balance sheet. You're talking about a fair bit of work this year. Are you fully cashed up for everything you've got in sight, which will bring about the production early next year?
Yes, we are fully funded. So you're correct. We have 8 million in the bank right now. We're cash flowing just under 2 million a month. So a very robust balance sheet, and we'll have no problem executing on the program that we have in-house. We're drilling very low risk development wells and infill wells. And when looking at that share price chart, it's been fabulous growth. We've had the wind at our backs a little bit with the oil price, but we've also got a very high quality asset base in Colombia. We're going to have no problem breaching that 3,000 barrels a day in 6 months.
What do you say as well about the price of oil? The company you're associated with this drill plan, I know, has got a sort of trajectory as to where oil prices are going. You satisfied that everything that's in place here is going to give you profitable oil when it comes out of the ground? We haven't spoken about the anticipated cash costs and so forth, but what are we looking at in terms of profit when you bring a barrel out of the ground?
So let's look at $100 barrel just as a reference point.
Right.
So our operating costs in Colombia, that's $100 US. Our operating costs in Colombia are between 10 and 15%, or $10, $15, pardon me. And then we have a royalty of about 12% on average. So there's $27 off the price. The rest is net. And so very robust fiscal regime in Colombia. The royalty rates and the operating costs are fabulous. And these wells pay out within 3 or 4 months. They cost $5 million to drill. And not for the faint of heart by any means, but we have a very interesting structure on this initial foray into the Llanos Basin. We've got a 100 square mile 3D seismic survey that's going to take place in the first quarter. And that's going to focus on 6 separate fault trends that are known to have oil accumulations with them. So each one of those fault structures on its own could produce between 1,000 and 3,000 barrels a day. So it's a very exciting phase in the company. And when I look at that share price chart, the pattern is what we like to see: higher highs, higher lows. And with the output that we're going to enjoy here in the next 6 months, we're going to see that share price climb quite a bit. And from an oil price perspective, we're very bullish. Supply and demand fundamentals are very supportive of oil price range between $90 and $105, which we're very comfortable with. Yeah. Our break-even price is just under $30 a barrel.
Yeah, let me just return to one of the points you mentioned at the top about Colombia, the country in which you're operating. What's it like there? How good is it? I mean, politically, what are we looking at in terms of the stability and the sort of the support that you're getting from the current government?
Well, that's a very good question. It's a brand new government, center-left government, and they've got an agenda to get into renewables and do a carbon switch, if you will. At the same time, they recognize that oil exports are 40% of the country's export capacity. GDP, we're probably closer to 20 to 25%. So they recognize where the purse is. They've come out with proposals that will enact probably in the first week of January, where they will not allow royalties to be deducted from your overall income. And that would be the first time ever that has taken place in South America, to be quite frank. So we actually expect about a 10% hit on the income. But as a stable country, they've got 80 years of production history. Oil and gas has fueled that country to be probably one of the best economies in South America.
Okay, let's just wrap things up and just get into that final question about what we should expect from this point on. Talk about milestones, talk about just checking to make sure investors are happy that things are on track. What are you expecting to produce in terms of some of the milestone updates for investors along the way?
Well, in the near term, we'll have a service rig on site at our initial production base that's going to recomplete 2 wells. That will likely bring on around 1,000 barrels a day gross. We're 50% of that. That'll take place in the first 2 weeks of October. We'll then embark on the drilling phase to further exploit that structure And those wells, actually, from a seismic perspective, are in the most favorable spot within the structure. They can come on at 1,000 to 1,500 barrels a day. So we'll have 2 wells down by end of year, another 2 wells down by the end of the first quarter that are testing a brand new structure. As well, we have another concession that we call the Oso Pardo block. And we've applied for an extension to that block. That could add upwards of 2,000 to 3,000 barrels a day with a very shallow drilling campaign. And that is in front of the regulator. We're expecting a decision on that very soon. And that is really a free option on what we're looking forward to here.
Okay, look, it's been great to catch up with you. Thanks indeed for your time. I look forward to catching up with you when you're in London next, and you must stop by the studio and we can have a more in-depth chat about what's going on. But in the meantime, look, thanks for joining us. It's a pleasure.
I look forward to the visit, and thanks for the time. Good day.
Okay, that's Marshall Abbott. He's the Chief Executive of Arrow Exploration.